Hi, good afternoon, good afternoon, everybody. Hi, Ethan here for Investing Note. Okay, hope everybody is having a great afternoon. Attendees are coming in. Yep. Okay, let's just wait for more of the attendees to come in. Okay. Awesome. Okay, guys. If you have any questions during this market commentary, right? Please put it in the Q&A section. Okay. We will ask our panelists to actually answer them if we have time. All right. Okay. Okay. Let's just wait for another 2 minutes. Hope everybody is doing well. Okay. All right. So welcome everybody to our regular live market commentaries. So as you know, the previous round we did market commentaries. We had Dan and another two special guests, but this time round we have Aaron Sim, who is the financial blogger behind TheBearProwl, right? So just to give you guys a little bit info about TheBearProwl, right? Aaron can say hi to the audience. Yeah. So
Hi
Aaron
everyone.
is actually 2018's SGX Bull Charge Challenge stock challenge winner, as well as our recent SG Active Trading Tournament ultimate winner as well. So today we are very privileged and honored to have him to actually share with us what he thinks about the stock market. All right. Of course, we have our veteran community member Dan joining us on the panel as well. All right. So without further ado, let's talk about some things, right? So I think right now, it's Biden has been elected as the president, right? So of course, Trump has been saying that it is a false election and is suing and all that kind of stuff. So perhaps then, I'd like to ask you, what do you think right now? So are we in good shape if Biden was everything was to go smoothly and he's going to be president in January? Share your thoughts, please.
Yep. Okay, thanks, Ethan. And first of all, hello everyone. Thanks for tuning in, and congrats to Aaron for winning the DLC challenge. Okay, and of course, happy birthday, Biden. Today is his birthday, 78th birthday. Okay, so what happened is that it has been more than 2 weeks since the US election, and we have been going, the US has been going up and up and up until we see Dow and S&P on record high. Okay, yeah. Just now, Ethan, you mentioned about this Trump being trying to do some legal fights on some of the vote counting kind of thing. But
Yeah.
I think most of us would agree that his challenge is quite weak lah, because there isn't a lot of evidence from him, and I think the market is pricing in Biden presidency already. Okay, and for Biden, right, he's someone. I mean, as a Democrat, he's someone who is pro-business. Okay, he is an advocate of this clean energy, or rather pollution-free energy, and he would rather go into a trade negotiation rather than a trade war. So he's someone who is more of a You know, he's someone who is more of a guy who you can talk to rather than you fight with. Okay, and since he came in, right, a lot of sectors has been going up. Okay, and I believe that whichever sector that is going to come up, there's something that we need to take note also. Okay, although the presidency election is over, the whole process is not over yet. Okay, because on 5th of January, right, we have these runoff elections at this Georgia. Okay, and this runoff election happens because there's no clear winner in that state. Okay, and if the Democrats were to win that runoff election, okay, basically Democrat will be winning the presidency, the House, the Senate. Okay, and this is what we call blue wave lah. Okay, a blue wave is not exactly good with the market. Okay, because there will be no counter check. Okay, so I think the market is expecting, or rather is anticipating, Republican Senate and blue House, rather a Democrat House. Okay, so with this assumption, right, if you are talking about healthcare, I'm sure healthcare is one sector that will benefit because Biden was previously the vice president to this Obama, and of course he will seek to revive Obamacare or something like Obamacare. Okay, so healthcare sector looks to be okay. Okay, and for banks, right? Okay, what happened is that a lot of news media or a lot of news report was saying that Biden's presidency may not be good to the financial institution, to the banks. Okay, but I think there is a balance that we need to put in here lah. Okay, Biden is someone who is very straightforward, a rule by rule person. Okay, so he's into regulatory constraint and regulatory everything have to move in order of regulations. Okay, of course, a lot of people are saying that because of this, banks will face a lot of regulatory control, and thus will not be able to grow. But then again, because as I mentioned, Biden is also a pro-business person. So we expect, or rather I expect that US will be more open up to international trade. And I think banks will also benefit from it because, you know, they will be able to lend money, you know, or invest in countries that was previously not so desirable under a Trump administration. Okay, so banks, I think there is a balance there. We need to see how it goes after the 5th of January, the runoff election, and we'll take a look at that. Because if there's a blue wave, right, then basically Biden can just push through whatever policy he wants. Okay, and for the tech, right, okay, Biden has always seek to increase corporate tax. Okay, that's one factor. And a lot of people are saying that high corporate tax would be a drag on tech company, especially those mega tech. But one thing to note is that same as what I have mentioned about the banks, right? International business environment is also good for tech. I mean, companies like Texas Instruments, Apple, Microsoft, Google's, they have business all over the world, especially in China, you know, in Asia, everywhere. So there is also a balance that we need to take note of lah. Okay, but in general, right, the whole market, or rather the Wall Street, right, in general I think is still okay. We are a bit toppish now, okay, but I don't see a huge correction. A small correction maybe, at least the near term, at least until the 5th of January, until January. Reason is because, first of all, I think just 2 days ago, the Fed Chairman Powell has just said that he's looking to extend the credit program. So the market is actually flush with liquidity. Okay, so in the near term, right, from now to maybe next month, I think we are still good. Okay, but come the turn of the year, right, personally, I'm turning very cautious lah. Okay, basically, there is a lot of news event that we need to take note of. Okay, first of all, as I just mentioned, the runoff election on the 5th of January to see whether a blue wave actually occurs or not. Okay, that's number one. Number two, we will also see looking at how Biden is dealing with OPEC plus. Okay, during Trump presidency, 4 years in office, right, he has formed a very close relationship with all the OPEC's main players, especially Saudi Arabia and Russia. Okay, the Saudi Arabia, the crown prince, I think is called Mohammed bin Salman. Okay, he has always trying to get cozy with Trump. In fact, he liked Trump because he need to buy weapons from US, okay, to defend against his neighbor, Iran and other country. Okay, so he has formed a very good relationship with Trump, Mohammed bin Salman. So that's for the Saudi Arabia side. Okay, and as for the Russia side, right, whether you believe in conspiracy theory or not, okay, the fact is that Trump have never disturbed Russia in his 4 years of presidency. And he have already publicly, on more than one occasion, said that he liked Putin. So that's up to anyone's guess. But what I'm trying to say is that Biden will have a very difficult time to build relationship with this OPEC plus. Okay, so that's one news event that I'll be taking care of. Okay, taking a look. The other one, of course, will be trade relationship with China. Okay, I think over the past 1 week, right, we have read of reports of leaked information that Trump is trying to, push off a lot of policy that so-called to sabotage Biden's okay, be it whether it's immigration, politics, economic, or trades. Okay, but personally, I think the most important is trades okay, and I think recently Trump also banned U.S. company from doing business with Chinese company that's linked to Chinese military. And take for that, it was revealed that 2 days ago, okay, China's holding of U.S. Treasury is at its lowest since 2017. So actually, all this while China has been dumping U.S. bond for the past maybe past few weeks, past 1 month, we never know. Okay, but it's now at its lowest since 2017. So although Biden is more of a softer person, but he will still continue a hard stand on China. But instead of trade war, I think he will rather go to a trade negotiation. Okay, so these are the things that we need to look at.
Take note.
Need to take note. And one last thing is that because now our market is so high, okay, we have to be very nimble. Okay, I mean, although I feel that it's always good to be cautious. Okay, I mean, one of the golden rule in trading is always the higher the market, the lower the exposure. Yep.
All right. Thanks, Dan, for sharing. So I'd like to get some insights from Aaron as well on the same topic. What do you see in the near term when Biden takes presidency? Love to hear your thoughts.
I think in recent months or past 1 year, I think I've changed a lot of the way I look at the markets and more. I think previously I've been a lot on the macro side. These days it's really more shifting towards the flow trading, how Mr. Market is really moving and what it's trying to tell us, and try to predict where Mr. Market is going. So I think start off from the elections, I think we see a big rally that was probably 3 weeks back. On the election week itself, the week before the election, I think we got a big bounce. Taking reference from S&P, I think we went down to around 3,200, and then we got a big bounce back to 3,400 levels, and then we got Biden. We got clear indication that Biden's going to win, and then we start to rally again, and then next we got vaccine news, and then we did that big pop. So with regards to the US elections, to me it's not too much of an issue, be it Biden winning or Trump winning. I think that's pretty much because I think the market odds going into the election is pretty 50-50. And markets has been where they have been. So I think Biden winning probably easier on the markets, as Dan have mentioned. But I'm not really putting too much focus on that. I think what the market is trying to tell us is with the vaccine news, we hit higher, 3,600 S&P. And then we did some consolidation. But I think during this period, what's very tricky is the COVID issue in the US and globally is actually getting really bad. US, we're talking about 150K cases add-on per day, and then we're talking about lockdowns in New York and stuff. But still, what's really interesting is the markets merely doing some small correction, 1%, 2%, trying to do a consolidation. All the charts are showing some sort of a triangle build up at the highs. So I think this is really interesting. And if you look at, it's not just the US markets. If you look at global indices, the DAX doing the same kind of consolidation. Nikkei actually doing a huge breakout and then doing some 3-4% correction. But the thing is, what's really interesting is even with all the bad news in place with regards to new COVID lockdowns, the market is not really doing a big move low. I think a lot of guys are expecting for correction. 3600, 3630 S&P. Wow, lockdown is coming. We got to go lower. But that's the funny thing. It's we didn't really do that, and it looks like at least it looks like to me it's a big signal that actually we could be in what we call one of the final legs of the rally. I think I'm very cautious as well. Like Dan, but I think probably in the next few weeks, in the next 1 month, the market surprisingly it could go higher pretty quickly. I think if we break the highs. So it's more of because these days I'm looking a lot on flow trading and stuff. If the market hits higher above 3600, 3650, I think all the gamma hedging will come back on the options, guys, because these days options huge amount of options flow for the US markets, individual stocks and indices as well. So yes, actually at our end we are pretty bullish near term, 2 to 3 weeks. As long as the stack levels hold, we should hit higher. But that should be chance for investors to really lighten up portfolios, I think. If we really do a big rally, because at the end of the day, I think COVID is really bad. We have a vaccine, but who knows what, right? I mean, we've been talking about vaccine for months now. So and I think the implementation stage of that will take a while. So yeah, depends on how it goes. Yeah, we think it's probably heading higher, but then time to lighten into December, and yeah, if it really rallies, we will be looking to position short from there.
I see. Thanks for sharing, Aaron. So okay, on the next topic, which is the vaccine hopes, I would like to get your opinion on how you look at the vaccines, because I think there are a couple of big players, Moderna and Pfizer, in the past 1 to 2 weeks, they have been saying that there's vaccine and stuff. But of course, yeah, you mentioned earlier you'll be still cautious, right? Hello.
Yeah. On the vaccine thing, I think of course we got the big one from Pfizer, Moderna, 95%. I think they call it efficiency or the coverage of the test. Both I think are stage 3. Both of them are stage 3. So and I think the US is going to go into some sort of a vaccination program, trial vaccination program within the next few months. So honestly, not too much opinion on that. Sample size for the stage 3, I would say, but probably I think really depends on the rollout, on the rollout of the vaccine globally. So I think COVID is in that sense. My take is COVID is here to stay, at least for the next 2 years. Be it how fast you roll out the vaccine. And that's why end of the day, I think although we are near-term bullish, next year we probably have to be bearish again, because if COVID is here to stay for the next 1-2 years, because once the market rolls, credit rolls as well. There's a lot of credit issues because of unemployment and stuff. So yeah, really that's the part to be really cautious about. So but net yes, not too positive on the vaccine news, I would say. Because I think implementation will take time, and yeah, it'll be a bit tough going forward.
All right, thanks, Aaron. How about Dan? What do you think?
Okay, yeah, indeed. What happened is that I mean, I don't know whether what you all think. Maybe it's a coincidence that the vaccine news is being reported 2 days after the US election. Okay, the result of the US election. Okay, so anyway, what happened is that since the US elections, I think on 3rd of November until now, right, our market has been going up. Okay, and it seems like vaccine news have been dominating the headline since the Monday after the election. Okay, which is the 1 day after the result. Okay, so we have been talking about Pfizer and Moderna. Subsequently, Moderna reporting their as mentioned, as Aaron mentioned, the 90 and 95% success rate in their trials. Okay, and that have promoted the market. Okay, but at the same time, right, we are also seeing a surging case in US, especially New York. Okay, in fact, if I remember correctly, there is already some restrictive measures implemented in New York already. Okay, like school have to be closed or at a certain timing or something like that. Okay, but anyway, what happened is that it seems like these last 1 week, right? Last 1 week is like a battle between hopes of a successful vaccine versus a fear of a surge in case. Okay, that's very likely the case going forward as well. Okay, at least in the near term. Okay, these vaccine versus virus scenario, right, is likely to sway the market in either direction. Okay, although I don't have a crystal ball to say whether a vaccine will come out or whether there's a surge in cases, but just based on looking at the past 1 week to 2 weeks price movement, market movement, what happened is that whenever there's a surge in case, right, okay, the market drop, okay, but the drop is not really very significant, okay, and when there's a vaccine news, right, okay, the market tend to move much higher, okay, so to just for discussion purposes, right, to take a bold stand, right, I think that at least in the near term, from now to end of the year, I think the market will still trend towards a hope of a successful vaccine rather than the fear of surge in cases lah. Okay, I think there's a few good reasons for it. One is what I have just mentioned, past data for the past 1 week. Okay, number two, Biden has just I think it was just yesterday or this morning. Okay, he has just announced that he's looking into a mandatory use of mask in US. Okay, so although there is a surge in these COVID-19 cases, right, because market move for expectation, okay, they don't move for facts. Okay, with all these measures coming in, right, I believe the market will take in positively in the near term lah. I'm not saying that when there's a virus case, the market will not drop. What I'm trying to say is that relatively speaking, okay, the upside it will be higher than the downside in the near term. Okay, and I agree with Aaron is that because for me I'm a trader and a broker, so my view is very short term or rather very near term. So after this year, right, next year, right, it really depends on how Biden is going to take on his new role as a president, and that's why I'm turning cautious in 2020 lah. But I have to stress that cautious doesn't mean that the market will drop. It just means that you know, if as Aaron said, if you have profit, you may want to consider taking some. Okay, and if you are considered entry, then maybe you want to consider to be more nimble. Yeah, that's my view on this vaccine.
So then, in that case, do you have any sharing on the Singapore market? Like, what are the things you're looking at right now?
Okay, for the Singapore market, right? Okay, very strangely, okay, our market is trending up, right? The global market, but it seems like we are on a totally different path, lah. Okay, we are actually riding on a phase three theme. Okay, so I think in the past 1-2 weeks, if you look at all the phase 3 stocks, okay, whether they are in aviation, retail, tourism, hospitality, all have went up to at least recent high. Okay, counters like SIA, Set Services, Genting Sing, CDLHT, CoverDelGro, all has went up already. Okay, and of course at this level, right, profit taking should be expected at some point in time. Okay, in fact, yesterday closing and I think Tuesday trading, right, we see some profit taking taking place. As in the price goes up, they came down a bit. Okay, then they stop there. Okay, they stop there. Okay, so what I'm trying to say is that there is some profit taking already taking place. Okay, but so far the profit taking is still not that big lah. Okay, so if for those investors who are still looking at phase 3 stocks, right, I think it's better to consider to buy on dip or just stay out lah. Okay, if you stay out, it's okay, let them run. But if you really want to get into the phase 3 team, it's always better to buy on dip lah. And personally, right, I'm looking at for phase 3 stock. Actually, personally, I'm looking at SIA lah. I know SIA has went up from 3-4 something to about 4.10, yeah. But recently they have been trading at 4.10, then coming down to $4 plus. You know, has been there for a while. Okay, 50 cents out of a 350 shares is a lot. Okay, but then again, what happened is that market move on expectation. Okay, we all know that the Singapore government has reiterated their stand to support SIA, okay, and Singapore as an aviation hub. Secondly, okay, they have recently get a lot of liquidity. They just issued a bond. Okay, I have to admit that the fundamental at this point in time is not that good. Okay, they are losing a lot of money. They are borrowing a lot of money. Okay, but as I mentioned again, with the government support and with market moving of expectation, I expect there are some more room for SIA as well lah. Okay, some more room for SIA to go up. But then again, just have to be more cautious lah. Just to be more cautious. For non-phase 3 counter, right? Non-phase 3 counter, actually, I'm also looking at venture. Okay, venture. Okay, I think I mentioned back in our very first live market commentary that venture is one of the most trendiness stock on SGX. Trendiness meaning they follow the chart almost to a T lah. I mean, we don't have to be an expert in technical analysis. I mean, you just use any indicator or price action or just a very simple moving average. You'll find that venture actually fit into all the indicators. Okay, so what happened is that recently venture, after their result, they have dropped from $21, almost $21, I think $20.80 plus cent to close to $19. Okay, and so coincidentally, the $21 is also a resistance. Okay, that's why I mentioned that it's so trendiness. Okay, so now they have been trading at about around the $19 mark for the past 5 working days or 5 trading days. Okay, the immediate recent historical price support is about 1850 lah. Okay, and seeing that the price has been consolidating, and if the price don't break the support, okay, I think it's a very good counter to look at, especially for those who are really into technical analysis lah. I mean, I welcome everyone to share more on this with me on Investing Note, and I look forward to it. Yep.
All right, thanks Dan for sharing your insights. Okay, let's move on to the next topic, which is actually the China's clampdown on tech stocks like for example the Ant Financial IPO and all that kind of thing. So I'd like to ask Aaron. So Aaron, what do you think about this? And what are you looking at for Hong Kong indices or the which sectors are you even looking at?
Regarding the Chinese tech stocks, I think we got some regulatory like you mentioned. We got some regulatory pinned down after N. Because these tech companies are so large, they hold on to so much market share of all the fintech services and daily life services of daily lives, the digital and banking and stuff of China markets, and they're expanding out to global markets as well. But I think end of the day, although reasonable that the Chinese government put in some clamping down with regards to because they are essentially so large, and you can't really allow them to be not regulated. They have to be regulated very tightly because it involves everyone's daily lives and such. But I think end of the day, regulation wise, yes, but it wouldn't be too much of a large impact on the stocks itself. I think as everyone have read the news, it's probably more of I would call it more of a political issue between maybe like Jack Ma and the Chinese government. So by end of the day, still positive for tech. I'm not talking about valuation wise. I'm talking about industry wise and the business of Chinese tech companies. So overall, I don't really think too much of a big issue. What I'm looking at in Hong Kong markets or global markets right now is really rotation. I think after the vaccine news, we have seen some kind of a rotation into growth stocks. So we've seen like the banks, global banks, rising on the news. Some energy stocks as well, airlines, cruise, and then I think some of the on the tech indices, Nasdaq or even the Hong Kong tech. I think we saw a big correction, somewhat of a 10 to 15% on individual stocks. What I'm looking at is I think the tech stocks are the leaders of the market in the past 5 years. So and they are the generals of the market. So there's one saying whereby where do you want to watch the markets? You can watch the generals first. we are getting some sort of a momentum shift into growth. From growth into value. I think if you want to look at general market perspective, you still have to look at tech. And just like very interesting, I think Dan have mentioned earlier as well on venture. I'm not too sure about what venture does, but I think it's pretty much a tech stock, because I think they supply some component parts to the big guys and such. So it went down from 21 to 19, whereas the rest of the stocks went up, maybe like DBS and banks and such. So and yes, I think in the past, actually the past 48 hours, past 72 hours, past 3 sessions, we're starting to see some inflow back into tech, which is in line with general market view if you are bullish, because at least at our end we are near term bullish. Yes, it's pretty much in line. We still expect some kind of flow back into tech, because it has to. If not, the value wouldn't sustain at all. So yes, if it does, and then yes, we might get a bigger shift upward within the next 1 month. We are looking at 1 month at most, actually. So and yes, indices wise, yes, overall Hong Kong index mostly made out of I think it's a good mix, mostly made out of growth, actually. So I think you see the Hong Kong tech stocks actually falling, but actually HSI is still trending higher, 26,500 now. So yeah, overall bullish, I would say. And yes, watch the tech where it's going. If we see a renewed interest in the tech stocks, Hong Kong, US, yes, I think the value is still alive, and yes, higher valuations can lead to higher valuations. So yes, at least at our end, it's near term bullish and while it lasts. So yeah, that's
all right.
much.
Thanks, Aaron, for sharing. So I'd like to share, right, what both Dan and Aaron has shared, right? So if you're looking at either hot Hong Kong tech stocks or even venture or SIA, right, you can actually take a look at the DLCs issued by SocGen. So these are, they offer a lot of different stocks that both Dan and Aaron has mentioned, and as you can see, the whole list is over here. So I just took a check, right, on that SIA, SIA long DLC. It was pretty crazy, this one. Yeah, it's pretty crazy. So there's a fixed leverage for that. And if you're taking a look at venture or even hot Hong Kong stocks, look at venture, right? Yep. I think DLCs, they had BYD as well. A couple of new listings over the past few weeks as well. So this is of a particular interest, right? So if you guys are looking to actually leverage, take some leverage, and of course have a lower capital outlay, you might want to consider DLCs, right? So you can, for more information, go down to dlc.socgen.com and take a look at all the respective products that they have. All right. So right now, let's take a look at the Q&A. Okay, guys, no questions? No questions for both our panelists? Wow, this week we don't have any questions. Usually we will be flooded with questions.
Yeah, that's right.
Yeah, but as I've seen from our community, I think the market has been a little bit quiet as well. I think it could be because everybody is cautious as well. It could be the case because, it seems like things are going well, but things are not going so well in terms of vaccine and in terms of like yesterday's jobless claims, it started to increase again. Yeah, so yeah.
I think one very important point that I would like to make at this take this opportunity to make is that a lot of points that we have mentioned, I believe with Aaron as well, is that all the points that we have mentioned is hinged on not having a major recurrence of the COVID-19 situation that we have seen in earlier part of 2020. Okay, because after all, these are all the unknowns and can never be predicted in the advance. You see, so so all the points taken are the assumption that there's no major reoccurrence of a very major COVID-19 situation like we have seen in March and April of this year. Yeah.
Thanks for sharing. All right, so we're at 12:35 now. Anybody got any questions? Last call. If not, we'll call it a session for this live market commentary. Nobody? All right, calling once, calling twice, thrice. All right, thank you, Dan, and thank you, Aaron. Hey, there's one question. Okay, one last question. What are your sentiments on the oil and gas sector? And do you see it going back soon as the economy recovers? Maybe Dan, you want to take the question first?
Oh, sure. No problem. Okay, for oil, right? Biden is a advocate of pollution-free energy. Okay, so when he take over the White House, it is widely expected that he will increase the cost of production for the major oil producer. Okay, and that is very likely to jack up oil price. Okay, and of course, it also come back to the point that I mentioned earlier, is that how he is going to negotiate to deal with OPEC plus. Okay, I mean, Trump aside, all president in the United States has never taken a liking for Russia. Okay, so now with Russia being so-called the leader of OPEC plus, okay, so we really have to see how Biden is going to negotiate on that okay, but in general, right, in the near term, right, I think oil price will still be considered on the high side. We're still going to trend up, but I'm not too sure whether it will trend even higher. Okay, but they should be staying at this high level at least in the near term. Yeah.
All right, thanks. How about Aaron? Do you have any thoughts on the ONG, or are you looking at that sector?
I don't particularly look at oil and gas stocks, but of course I look at oil, Brent oil, WTI itself. Really just looking at the chart, Brent at 44, 45, it's actually the year's resistance. If you were to ask for my take, it would be similar to what to my equity market take, and on currencies. I think we are bearish dollar. Bearish dollar is bullish for commodities. Near term, my guess is that we will break resistance, because net we are actually very pretty bullish on the risk on sentiment. So there could be a breakup in our take. But then again, coming back to what I've mentioned earlier, all these are just flows. Near term, COVID is going to be here. We're not going to be. I don't think we are going to be flying around, getting to go on holidays next year as well. So airlines recovery, it's going to be pretty much distorted. It's not really. We are not really going to be like trending higher on all the old economy stocks and like what Dan said, the phase 3 stocks. So yes, we can have a pop, but if you are holding anything, I think it's a good chance to offload. Buy on dips, as Dan mentioned, and yes, because end of this year I think pretty bullish, but next year it's hard to say. COVID is here to stay for at least 1 to 2 years at least in our view, and that means that volatility is here to stay. Really good chance that we're going to get more downside next year as well, to test downside, and that's where the dip is probably if you're looking to invest, probably that's buy on dip, as Dan has mentioned.
All right, thanks Aaron for sharing. Okay, I think we are a bit past the time. Thank you everybody for attending this market commentary. For next year's session, we probably need a few more webinars. It's too early to say right now. All right. So of course, thank you to our special guests, Dan and both Aaron and Dan. Right. Thank you everybody. So we'll have a good day, and we'll end the live commentary here. All right. Thank you guys. Thank you everybody.
Thank you everyone. Thank you.
All right. Thank you.